Okay.
Good afternoon, everybody. I will call this special meeting of council to order. It's Tuesday, December the 2nd at 4 o'clock. We are in town hall. However, we are upstairs in the boardroom for this meeting. The temperature in council chambers is not quite sub-zero, but very, very cold. So we've moved up here. So item number 2 is the adoption of the agenda. It's moved by Councillor Card, seconded by Councillor Crapper, that the agenda of the special meeting of council to be held on December the 2nd, 2025 be adopted as presented. Any errors, changes, call the question. All in favor? And that's carried. Item number 3 is any declarations of conflict or pecuniary interest. Seeing none. Item number 4 is the purpose of this meeting. Is the 2023 audit presentation and audited financial statements by KPMG. Our auditor is going to lead it. I'm just going to make a comment for people watching today. There will be a lot of information that comes out in the report. You did hear me correctly when I said that this is the 2023 audit. We have had some, I just say distinct challenges at Town Hall over the past few years, which we've worked our way through. But the good news is we're here today with 23, hopefully approved and finished tonight. Lori will, when I introduce Lori Huber to you, she will also make a comment in her report on the expectation of the 2024 audit. But spoiler alert, it's a much better story and we anticipate it in the next few months. So with that being said, Lori, I think I'll turn it over to you and Carol, and please go ahead.
Wonderful. Well, thank you very much. Good afternoon, everyone. It's my real pleasure to be here before you to share with you the highlights of our audit. It has taken some time, so really excited to be here today to share with you the highlights. So we will start in the glossy. There was 2 attachments as part of today's agenda. What I've tried to do is marry the highlights of the financial statements into one report to make it easier to review. You will find it is a comprehensive report. I won't go through all of the details. I'll certainly stop on the highlights, but as always, if you have any questions, feel free to stop me or save them till the end. I'm good with either way. And maybe just to introduce Carol Fuller to my left. Carol has been an integral part of the audit this year in terms of some accounting assistance that she's provided through the course of our work to make us be here today, essentially, with the items completely wrapped up. And in particular, I know in the next agenda item on today's meeting is to talk about the deficit, which I will allude to as well in our report. So with that, we'll get going. Kimberly, if you want to follow along, we will start on page number 5 of our report. And so that's the status of our audit. So really, we are in a position to be complete. You will see a couple of bullets when we issued this report last week. We were waiting for those things to come in. Pleased to say those are now received. So really it is really up to council to accept and approve the financial statements. And we can have them in final on letterhead as early as tomorrow if we so wish. So moving into the numbers themselves, what the first page you will see is your statement of financial position, which is a duplicate of what you'll see in the financial statements themselves. So the statement of financial position is really your balance sheet at the close of business being December 31. On the right-hand side, you will see some of the financial highlights. I've tried to pull out some of the more significant variances year over year to give you some insight in terms of why the change. So if we start at the top, you will see cash in the bank has increased, certainly year over year. And I won't go through a lot of detail because I do recognize it's 2023 and we're sitting here, it's December 2025. But just to give you a little bit of color in terms of what was going through the accounts in 2023. We will see in more detail in the financial statements some of the more increases and decreases in the detail of the cash, but really the short story is if we look at the accounts receivable last year, we're a little bit higher than what we would have expected, and you can see that decrease down at 329. Last year being 2022, there were additional outstanding amounts related to the Rideau St. Lawrence that were collected in year. So that makes your cash go up and your receivables go down, essentially. I'll save taxes receivable until a little bit later on in the slide because I've given you a little bit of a trend analysis on your taxes receivable. So I'll hold that for now. On the financial liabilities side of the house, the first piece you will see is your accounts payable and accrued liabilities. That's an interesting one because it's really a function of timing. So it really depends what bills come in and are paid. And you will see that capital activity can really drive significant increases in that line. And you will see on the right-hand side, capital construction projects, there were amounts included between the 2 years of 109,000, which is really a large part of that variance. Other items to bring to your attention are the obligatory reserves. We certainly spent a lot of time and effort on those obligatory reserves through the 2023 audit. One of the significant components included in there you will see are the amounts related to OSIF. So OSIF is a capital grant fund. And so that runs through your obligatory reserve. And so there was some marrying up of those accounts through the course of the year to make sure that the revenue recognition was on some eligible projects. So that was certainly one of the things that were rectified in 2023. Long-term debt, you will see, I know that tends to be of interest to council. That has decreased year over year, and that's really a function of the principal payments that were made during the year. So when you take your financial assets minus your financial liabilities, that takes you to what we call net debt. Below there, you will see your non-financial assets. So this is the investments that you've made through the course of the year in your tangible capital assets. So things like we'll see on the next slide in terms of the composition of tangible assets, but there were significant additions in year, just over $500,000. And then of course, to offset those additions in any current year, you have your annual charge of amortization. And so the net book value has decreased a little bit because the annual charge for amortization increase was greater than your additions. I won't go through in detail, but a lot of those names you'll see on the bottom right-hand side of that slide there were some of the more significant items, and hopefully they all look familiar to you. So you take your net debt, you add your non-financial assets, and that takes us to what we call municipal equity. So that's where your reserve and reserve funds will sit. That's a component of that piece, and we'll see that on a subsequent slide to give you a little bit more insight. So the tangible capital assets, as I said, it's a significant portion of your overall balance sheet. And so this just gives you a little bit of a visualization in terms over the course of time on the net book value, where monies have been spent on the individual components of tangible capital assets. Sometimes I find pictures share a different story than just looking at numbers sometimes. So if we go to the next slide, I'll spend a little bit of time on the reserve and reserve fund. So as I said earlier, this is part of your accumulated surplus or your municipal equity. What we've done here is a bit of a trending analysis over the course of time over the last 5 years. So you can certainly see that there has been some increases in those amounts year over year. And if we go to the next slide is where we look at one of the KPIs that the province does. When they ultimately get municipal financial statements, they will run some data. And one of the pieces of their analysis takes a look at your reserve and reserve fund as a percentage of operating expenses. And you'll see at the bottom of the page, their benchmark is greater than 20% is something that they look at. And you can certainly see, certainly over the last 4 years, you have been in addition to that. So that's another good news story to share with you. The next slide gets us into tax arrears. So tax arrears, another word for that is your taxes receivable that sits on your balance sheet. So what that means is taxes earned, so taxes that should have been paid that have not been paid and converted into cash, sit as an asset on your balance sheet at the end of the year. So one of the things that the province looks at as well is to say, what is the quality of those receivables in terms of their collection risk and their age? And so tax arrears as a percentage of your current levy is another KPI. And if we look just a little bit lower on that slide, you will see that the province benchmark there is actually, I think, Kimberly, it's the next slide down. Their benchmark is 10%, and you can certainly see well within range as well. So interestingly enough, on your balance sheet, it does look like taxes went up, but your levy went up as well. So it's again in proportion to one another. So again, as a percentage, certainly very healthy. I have the benefit of seeing a lot of financial statements in any given year, and I honestly think that you might be one of the lowest that I've seen actually. So good news story on that front. Moving along on your consolidated statement of operations. So this is likely something that is most meaningful to you because it shares with you the in-year activity, be it total revenues and total expenses, and it also aligns as well with your budget. But I will say the budget here might look a little bit different than what you're used to. And there is a budget reconciliation note in the financial statements because you're required to report under what we call public sector accounting standards. And so not a lot of municipalities audit under that. No, sorry, do a budget under that same basis. So we're required to restate the budget to be comparable. And so again, you'll see on the right-hand side some of the more significant variances in terms of revenues and expenses. And again, that's the note we put at the bottom. in terms of the contemplation of the budget related to amortization. Amortization alone was $604,000 that's showing there in your actual. So in terms of the highlights for the year, if we jump right to the bottom in terms of an annual surplus, you will see 407 in the previous year compared to 239. I won't go through a lot of the detail because I think a lot of it is really sort of self-explanatory, but you will see some nice increases in revenue during the year, including donations that were received from Friends of the Arena. Investment income, I would say, was off the charts across the board in 2023. Certainly a little bit different now in terms of the landscape in the market, but you can see a pretty nice increase relative to the previous year and with budget. So that was a nice win to the bottom line. Next slide goes into operating expenses by type. So the face of your income statement has to show it by department. This is just another way of showing the same total expenditures by categories, if you will. Again, just a different way to slice the data. So in terms of our audit approach continued to be very much risk-based. So standing back, looking at the financial statements and certainly identifying where we believe there's a greater risk of material misstatement. So I would say at the outset, you will see something at the top of the page there in terms of management override of controls. You might be wondering what that is. It sounds scary. We're saying it's a significant risk. That's something that's mandated to us by the profession. So I've been getting this at a lot of councils lately to say, I don't like that. How can I change it? I can tell you, I can't change it. It's automatic. It's deemed to be presumed. So we're required to do work against it each and every year. You could have the best system of internal controls and have 20 people in finance, and I'd still give you the same risk assessment because it's not meant to be unique to yourselves. The other thing that should jump out at you on the page here as well, and you would have heard me a long time ago talk about this in 2022, there was a fairly significant new accounting standard that was required to be adopted in 2023 related to asset retirement obligations. So that was new and different, which is why you'll see a risk rating that's other than low. So the next slide, I won't go into detail other than to say we've done the work that was required for that presumed risk and certainly nothing significant to bring to your attention. I've given you a lot of detail than perhaps you're interested in terms of asset retirement obligations, but certainly the short story is to say the team undertook the exercise that was required. Historically, there's always been a landfill, which landfill closure and post-closure has always been part of financial statements. That was rolled into asset retirement obligations. The additional piece to asset retirement obligations was looking at all of your tangible capital assets to say, is there anything in the portfolio that might have an obligation to be remediated at some point in the future? So a great example across all municipalities was there's a lot of old infrastructure built a number of years ago that would have asbestos. So the team had to come up with a quantification of the amount of dollars that would be required to remediate that in the future. In your case, that was only about $60,000. And so that's now sitting on your balance sheet, and that will be required to be reevaluated each and every year. In terms of observations on the village's municipal equity, you will see when we get to the financial statements, if we get there, and perhaps this is a good chance to go there. If you look in note number 7 of the financial statements, which is on page number 16, a lot of time and effort went into the understanding and the analysis of how we got here. And I know it's been a lot of conversation. So what I would draw your attention to in total, you will see the municipal equity pretty similar year over year in total, 12.3 million compared to 12.1. However, we are required to break this out into its component parts. And if we look in the middle of that page in note number 7, you will see that the unrestricted surplus is actually a deficit for both the village and the utilities. And so you can see it was the same case in 2022, but those numbers have increased. So again, a lot of time and effort, and I don't want to steal the thunder for the next item on the agenda, but to say that the numbers are what they are, and the team has had healthy discussions, and there was a plan forward to deal with that. Moving along in our report, in terms of the quality of the books and records, perhaps we can look at these two together. Kimberly, I'm on page number 19. So as part of our audit, as you know, we don't look at all of the transactions that culminate into the financial statements. We set an annual level of materiality, and we certainly audit to that level of materiality. So for fiscal 2023, that was set at $90,000. So what that meant through the course of our audit work, we sat with the team and tried to understand anything that was different in excess of $4,500, which is 5% of that number. You will see on the bottom of this page, we did identify a couple of entries as we were trying to close the audit that have not been included into the draft financial statements in 2023. One was related to an accrual, and another one was related to an estimated unadjusted error related to the consolidation of the library. So as a reminder, these are consolidated financial statements. You're required to report those entities under which you control, which would include the library. There was not a separate audit library for 2023. So we tried to work with the team to understand how the accounts would look had the accounting been current and up to date. And I'm using my words carefully. So what we chose to do is estimate what we think could be different. But at the end of the day, the important piece to bring to you today is that the accumulation of those items do not impact our audit opinion, because as you'll see on the bottom left-hand side there, the 36,000, much less than the 90, so that we could say that it doesn't impact our audit report, and we'll deal with that in the next fiscal.
Mayor Jones, could I make one quick comment here, or would you rather I wait?
No, go ahead. Comment or question?
Yeah, just because I'm on the library board,
Mhm.
it's relevant to people looking at the picture and not understanding, reminding ourselves again that we're in 2023. And
Mhm.
assessing what was happening then and before, and that in those years, for sure, the accounting practices were very different than they are today for the library.
We can get to that.
Yeah, I know, I just wanted to point that out because the library is being singled
We're
out.
watching.
Yeah,
Absolutely.
and that we've been working with Kim over the
Yeah.
past couple of years to establish new practices in the libraries on top
Mhm.
of it.
Yeah, we covered that. Thanks, but thanks for saying it once. We'll have to say it 4 or 5 more times. Yeah, thanks so much, Marty. Thank you, Violet. You're doing a great job.
Okay, so the next slide speaks to control deficiencies. So we spend a lot of time and effort, as you can appreciate, on the dollars and the numbers, making sure everything rolls together. We're also required in a financial statement audit to give consideration to the internal controls of our financial reporting. So here I am, it's December of 2025. We're talking about 2023. In my role as your engagement partner on the audit, I need to make the call to say whether or not I believe there's a significant deficiency in internal controls. To be candid, the audit has spanned several months, more than a year, variety of trial balances through the course of that time, and a lot of toing and froing. So the combination of those pieces, along with conversations, turnover, vacancies, has led us to the conclusion that we believe there's a significant deficiency in internal controls. So what does that mean? We dug a bit deeper to make sure that we're covered in terms of the risk on the untested populations. And so again, without belaboring the point, it actually came together quite quickly when the time and effort was put onto it in the fall. And certainly moving forward, to echo the mayor's remarks, I certainly feel as though it will look very different in 2024, and there's a plan forward to start next year's audit as early as next week. So that's certainly the hope and the plan forward. I think this is in our rearview mirror now, and we've got a plan to make sure the presentation for the next fiscal looks significantly different. Other things that I wanted to share with you that I think I've actually touched on a number, maybe I'll stop briefly on page number 24. It's always a good chance, especially now that I'm here in person, which is really nice. I am required to share with you, being those charged with governance in terms of your oversight of the financial reporting process, any of these items on the left-hand side to the extent they exist. It's a good completeness check, and it certainly should be meant to give you some comfort that those items did not exist. Otherwise, we would have been having conversations, save for the significant deficiency in internal controls. We have remained independent through the course of our audit. We do give consideration, healthy consideration, in terms of the level of accounting assistance. So pleased to say, certainly Carol was part of that accounting assistance, and Carol is very much separate and distinct. Although she works for us as a contractor, she has certainly not touched the audit, so we're not perceived to be auditing our own work, which is really important to share to the community as well. So I promise I'm almost done, taking me to the required piece, which is really Appendix 1A, which is the culmination of a lot of hard work and effort, getting us to our draft auditor's report, which is also included in the front of your financial statement. So based on everything you've heard here this afternoon, we are proposing, Kimberly, if we just go down one more page, it is a proposed clean audit report that the financial statements are presented fairly in all material respects for the year ended December 31, 2023. There are a number of other appendices behind that report, but in the interest of time, I think this might be a good stopping point, and welcome if there's any questions, comments that you'd like to raise.
Okay. I'd like to make a comment and then throw it open for questions. I started with similar comments, but you know, this group knows that for you to get to the last words that you just said, which was a clean audit, was time consuming for you, your staff, for our staff. It has been an extremely stressful period of time, probably for your staff, but I know certainly for ours. I know there was a couple of moments when Tammy, who you know, we rely on a great deal now. Tammy and Carol and Kim thought that they were there, and staff took another look at it and said it. So all I'd said to them was, bring it when you're done. So to hear you say it's a clean audit, you know, our gratitude to KPMG, to asking Carol to come on board to help when we get to the next item. You know, she gets 5 stars for that next item. And for Tammy, you know, we're a small village, and a lot of people listening won't even understand when you said it took several trial balances. We do now because we've been watching it unfold. And to our staff who are excited about today, so that they can move on to 24, expecting, based on what you said, that council's going to support this. It's been harrowing. And for my colleagues, when I talk to them, I talk about the need for a well-run treasury. Because this is an example, it's not like your savings account, you get your passbook in the machine and it updates it. When there are outstanding issues, it's a paper trail to find it. So open up if anybody has any questions or comments. But the words that I did want to hear, you have said, which is a clean audit, were there. So for my council, any questions? Gary?
Yeah, so to understand it for myself, we've gone through, in my opinion, a lot of systems, if you want to call them systems, over the past few years as far as the county goes. I think this is my 7th year, and I've probably seen 4 different methodologies for presenting to council as with the numbers and what have you. I'm given to understand now that we've adopted the government standard for the accounting procedure for that everybody is I think obligated to go with it, and it's functional now.
You want me to take that one?
Sure.
So I think the challenge was your trial balance, so going back to 22, was a trial balance that didn't necessarily conform to the type of presentation we provided, which is by department and then by category. It wasn't an easy thing to pull together. I think it was identified back then. I think, I know in 23, Tammy undertook to develop a chart of accounts, which is what is kind of codifying the expenditures, the revenues, the assets, the liabilities. That is a more standard account, lends itself to the type of presentation that is presented. I commend you for making the decision to go back and do that for 23. Because otherwise you wouldn't have as good a comparison for 23 to 24 to 25. So sadly, the long answer to your question is yes. We are now more on what would be a government reporting standard. And I think you've done your due diligence in making sure that that'll give you some better quality information going forward.
Thank you.
And I think that they're working, staff is working with Tammy to extract from the monster document the information that they need. So the conversation we had a couple of months ago, all is not lost. That's a work in progress. I understand that Kim and Tammy are working on to not interfere with what the treasury works with, but to make it a report that when we get the variance, you'll understand. So Amy and then Joe.
Just as a follow-up from Councillor Card. So moving forward with this new system in place, something like a historical deficit, this will alleviate that fear or risk again?
It should help you identify it in a much more timely manner. Part of, I think, what happened is you did have some staff significant turnover in positions, records got behind. So you can have a good accounting system and a good account structure, but if your books aren't up to date, it's still not gonna give you the relevant information. The structure now will help you generate that in a better format. And if your accounting is up to date, then it should be a more timely, look at your financials and then prediction to your future.
Okay. Councillor.
So just to make sure that I understand exactly what you just said, so these recommendations for the internal controls that are in the document, having moved to this new accounting structure, this will address most of the recommendations that were in your report?
It will if your books are kept up to date on a timely. I would say to you, your structure is sound now.
Okay,
But if you don't put the efforts in to make sure that your bank is reconciled, that somebody's looking at your receivables, that someone is looking at what is eligible for grant revenue and submitting the claims on a timely basis. That's the key, like, that's as important a piece as the actual structure. But I do believe you're headed in that direction. I think you've taken a lot of very positive steps to get there. And to the extent that we are expecting, because we've had this discussion as we work through 23, we're expecting your 24-year information next week. And I think that Tammy and the team, and I think you've got Sarah on board now. And I just want to put a kudos off to Patty, because that Patty, she dug up so much information for us, and sometimes that person doesn't get the credit. But that said, I think we are absolutely headed down the path based on where you're at now.
Okay, go ahead, Chair.
yeah, just one additional thing, since you mentioned you're expecting the information for 2024, I've felt that we've been behind a bit, so can you talk a bit about timing in terms of when we can expect the results back on the audit on 2024?
That one will defer to Lori.
So we've had this conversation. So I think if the stars align and we're ready to go, I think I should be back here, maybe not in this room, but maybe downstairs when the heat's on in February. I think that's realistic. That's kind of our game plan. So we're hopeful. The only other thing I think I would add to what Carol is saying, I think it's really important to know these are on the accrual basis, not the cash basis. So if you only do a balance sheet once a year and the cash is flowing through and you don't do the accruals at the end of the year, that can dramatically change your financial position as well.
Tammy's nodding here.
Which
Let knows what a balance sheet reconciliation
Yeah,
is.
yeah.
I know people don't care about their balance sheet, but it's really important that you do a balance sheet more than once the year, because that can really, you can be tracking, so you think, through the year, and then you do all these year-end adjustments and you could be surprised. So again, I think once you figure out what the quality of the internal reporting is, and I think, 2025 is almost over now, getting a plan for 2026, I think will be really important.
Okay.
But you need the balance sheets for the previous years to make it valid too. So anyhow, I don't want to, and Tammy's smiling too.
Yeah.
So
Yeah.
we're headed in the right direction, and assuming there's not a lot of change, I think it's going to be quite positive.
No, apparently the CAO has told everybody needs to hold their position for at least the next year. Nobody can move on. They all have to stay in place. So for the public, to understand, just to remind the public, recruiting a treasurer in a municipality the size of Westport is a real challenge, because we really don't give that person the opportunity to only do their accounting job, their treasury job. They also have to handle the front counter. They also have to sell garbage bag tags. And so based on a lot of thinking and consideration, we've gone to a different model. We have hired a person who will be doing the financial analysis and learning more about that. But in the meantime, the strong guidance, particularly in the things that Lori and Carol have just talked about, we've contracted with Tammy. And so we feel well supported. It's a financial model that we can manage, and we feel well supported. Tammy has had a baptism by fire in what the ins and outs are of Westport finances. And so I'm very, very confident that, as you say, moving forward, 26 will be the test year, but I'm really confident. So Marty, did you have a Councilor Capper question?
A comment. one of the last thing you want to see as a board member or a counselor at an audit is a surprise. And I want people who are watching to know that none of this really was a surprise to us, because the length of time that we've been doing this, we've been kept informed by the CEO, by meetings with Tammy, by, reading the information. And we recognize there's been struggles for a significant period of time. And that, as Mayor Jones has said, they take a long time to unravel and figure out how to put them back together. So there aren't any surprises in this. There are, issues that we're figuring out how to resolve. But I think it's really important people recognize that when there aren't surprises, it means you're kept abreast of the issues, and we're not, none of this is out of the blue.
Yeah.
2023 is a long time ago. We've learned a lot through that, and I'm glad you mentioned the staffing, because that's what I get asked most about. What are you doing differently? Well, a lot,
Yeah.
and it's about capacity. I would say in-house. It's one thing to have a system. It's another to manage that system. And thanks, I think Kim, CAO, has picked up a lot of slack over a long time, and now we've got the pieces to support it. So I feel a lot more confident in that.
Good. And hopefully that conveys to the public that, I like your point that there's a lot of information tonight for the public who had not heard it yet, but for us, it was some confirmation. So if everybody's finished, we're gonna get the motions on the table, and then we're gonna go to the historical deficit. So it's moved by Councillor Crapper, seconded by Councillor Card. The council accept and approve the 2023 audited financial statements, and that council receive the audit finding report for information purposes. So any other discussion on this, team? Okay, I'll call that question. All in favor? Okay, and that's carried. So thank you again. And now another matter that we have talked at great length about, just following through Councillor Crapper, is historical 251. And I'll let you tell the story. Carol, please, Carol Fuller, if you want to go ahead and talk about that.
Sure, I think when the 2022 audit was wrapping up, it came to light that there was a deficit position both in the water and in the village. The village contracted with, and I would say with me and not KPMG. KPMG could not do the work because it would have been a conflict of interest. To take a look and see if we could figure out what was the source of that. So we sent her a report, I think, to Kim. We had meetings with Kim and some of the top team to review the number, but speaking to the water and sewer piece, it really had to do with the transition of treasury staff, and that Anne Marie left, Joe came on. You had a major capital project underway, which was your sewage, the rebuild and all that. And then I think you had some challenges with it, and I think had some litigation in the middle of all that. And there was a gap in there of a piece that was to be financed by long-term debt once you had all of the pieces settled. That never happened. And I think it came about, I think it was noted in 23, it was noted in 23, we finished 22. And then I think you changed treasurers. And consequently, it didn't happen in 24, and it's carried on. So I believe, looking back, and I believe you've looked at that internally, the root of the water and sewer really had to do with the capital project. You have a variety of ways to fund that. One is with reserves, one is with a rate increase. Your pattern had been funding it with long-term debt, so that would be your third option to fund it. So I think that addresses the major shift in the water and sewer. There was an in-year deficit in 23 of approximately another $77,000. That too had to do with capital works. I believe when we look back at the source of it was you have some significant residential growth that you were relying on for some additional, what we would call capital funds in the nature of development fees, that sort of thing. The timing was such that those were not realized in 23. So your 23 increase in the deficit in water sewer was largely on the capital side. So if you're trying to break it down, around 250 was prior to 23, and around 70 is for 23. I think the construction or the growth has occurred more in 24 and 25. And perhaps I read your agenda and I read your report. you know, perhaps the thought on that is to wait to see where 24 lands and where that growth lands before you make a decision on the 24 capital projects. Does that help with the water and sewer? And that deficit?
Yeah. Is that all right? It makes,
Mhm.
Makes
the
sense.
251 we were clear on. And the 70, as I understand it, it was anticipated there would be connection fees in 23. The houses 23, there was no growth for connection fees, but it was put in the budget that we would get X amount of dollars,
Right.
$70,000. So
Correct.
that's part of that. And I think that Carol's point is where Kim and Tammy are at, is let's wait to see how 24 flushes out before there's a suggestion of worrying about that $70,000 from 23. So did you have questions?
I just had one question. From what I hear, the intent at the beginning of all this was to finance any lack of funds to bring the project to fruition. So the expectation
Correct.
hasn't changed. It
Correct.
just happened at a different time.
Yeah. So that 251, to follow up with what Carol said, had it not fallen between the cracks, was always expected to go on the IO debt for the sewage system. So that's why the recommendation that you have today, I'll get that motion on, moved by Councillor Aragona, seconded by Councillor Card. The council directs staff to secure a loan in the amount of 251,000 to fund the historical debt. Is exactly what you said. That was the expectation at the time, and it just got dropped. So speaking to the motion, go ahead, Councillor Pepper.
Yeah, it's the looking at option 1 and 2 with my limited background in municipal financing through debt, when we have a reserve. 2 questions really. The first being about the limit. And I read that we were in the briefing note that we were pretty close to we were shy of the limit by some 200 to 300 or $250,000, but we hadn't yet put the the plow truck into the debt equation. Should I be worried that when we do, because we're talking about doing that this coming fiscal, we will in fact be at the debt threshold? And do we want to risk being at the debt threshold at a time where there may well be other things that we require access to debt to deal
I'm
with?
not sure the interpretation's right. Go ahead, Kim.
Yeah, thank you. Through you, Madam Mayor.
And you
I
would not be the first person to interpret it that way. Let me snicker from Kim and Robin. So we know exactly where you're at because we were there last week as well. So go ahead.
Yeah, so what it means is the annual repayment limit. So that's
Yeah.
what you repay each.
Not the amount you borrow.
Each year, not you borrow, it's not a ceiling. And I discussed that very topic with Tammy, realizing that that's upcoming for 2026 as well. And she had indicated it's about the same amount as the principal repayment amount of the 251, which is 20,000, which still doesn't reach close to our debt repayment limit, but I'll acquiesce to Tammy. If you have anything else to add on that, or is that?
Yeah, no, thank you.
Oh,
And through
thank
you,
you.
Mayor, the annual repayment limit is the principal interest payments. It is not the debt. So
So we're all, Marty, you're in good company
No,
with
good.
Kim and I.
That
So
was the
there we go.
technical part of my
We're not
context.
snickering, really.
Yeah, no, I'd snicker at that. But what I wouldn't snicker at, I guess, if I were the one borrowing, would be about financing long-term debt. You know, when I'm managing my home finances, I consider whether I want to use the cash on hand to reduce the debt that I might have to carry forward. And I'm struggling to, with the best interests of the village at top of mind. When I look at options 1 and 2, I'd like some better explanation of why we wouldn't reduce the amount we're going to borrow with money that we're not making much interest on, when we're going to be paying higher interest on to borrowed money. And not the way a regular household would probably approach it.
So I'm not sure, Carol, did you want to try that? And
So one of the things, if you were to look on the reserve schedule in your statements, which is the very last page,
Okay.
your water and sewer reserves are at 126,000, so you don't have enough in water and sewer reserves to fund the 250.
Yeah.
Before I made the decision of using the reserves, I would be looking at what has happened in 24 and 25, because what you don't want to do, your original intent, and it's your privilege to change that intent, was to fund that with long-term debt. If you look at what's occurred in 24 and potentially 25, where you're going to use those reserves or have you used them, such that if you even scope that out and use it now, are you then just building something in for 24, 25? You're gonna have to deal with in debt.
Right.
See, they're all nodding their heads, Barney.
I
That's
love.
always telling to me, right? When all the financial wizards are nodding their heads.
I can't even see all the financial.
Yeah.
Tammy's nodding.
I'm making eye contact.
I think the questions are what are important, and the public, we all borrow money and we all have savings, so figuring out why, I mean, so really it's about risking that there may be other things we need our reserves for that are more important to use then than now, but we're also risking that interest rates go up. And I thought one of the things I heard earlier was, maybe I was interpreting wrong, but borrowing money for a shorter period of time and then ascertaining whether we
Yeah.
should be buying our way out of this debt by using reserves,
They're all
but
nodding.
because my math says that 19 years at 4 point something is 200 and something thousand dollars. That goes on the taxpayer. And either way, this goes on the ratepayer.
Repair.
Because there's only one place money comes from. So I don't want to saddle ratepayers with more than we need to when we got money sitting in the bank. That's
Okay,
where my head is at.
Okay, go ahead.
Through your worship, doing that wouldn't preclude, a long-term debt wouldn't preclude paying the debt off
Mhm.
at any time,
Correct.
from what I've seen. So I don't think there's any plus side to taking a chance on short term and coming up short on cash or extending it. And then, as Councillor Crapper said, when you see your way clear at whatever point in the 7 years or 10 years you decide to finance for, that you would then apply your reserves to that amount and cancel that debt. I think it gives council and staff the opportunity of flexibility. So it's not mandated that in 3 years you better have this much money in the bank or you're in trouble. You could go for it would be strictly when you have it, you spend it kind of thing. It wouldn't be you wouldn't be pressed for it.
And I do always watch the financial people and this was their idea. Did somebody, I'm gonna go to Tammy in a minute, but
Yeah,
did
thank you.
council? Just hang on, Tammy.
Yeah, I just want to, I think I may have missed something in the description. So I just want to go back to the briefing note on at the bottom of the briefing note, it said that the funds were initially intended to be recovered through the legal process in 2019. But now we're talking about the funds were intended to be addressed with debt. So if somebody can make that connection for me.
Sure. I can do that. The contract was not completed on time. And effluent had to be hauled to Brockville and Smith Falls from January 1st of 2018 till when the LSSDS started functioning, to the amount of $251,000. And so it was considered liquidated damages. It was an unfunded liability and tucked away as liquidated damages at the time, expecting that to be paid. And then the lawsuit started. And then, we went down that path. So at the end of the day, when we settled very well as a village. But there was the wrinkle, and all the lawsuits were around the $750,000 additional sand required for the LSSDS. So at the end of the day, when the staff put together what the IO loan should be, they addressed the issue of the sand, which was really the amount outstanding and not the liquidated damages. So innocent, as Carol explained, change of people, where it was parked in the ledger, I'm not sure, but I don't want to say no harm, no foul, but for the public listening, there was no intent to do anything other than to roll that up at the end of the day, and it just got lost. So if it had been another amount, my memory might not be clear, but 251 is really clear in my mind that was the unfunded liability for the haulage past the date the project was supposed to be completed. Is that okay?
Yeah, can I follow up?
Go ahead.
Just, so I'm wondering about the way that we would finance this, and to Councillor Crapper's point about, the cost of borrowing this amount of money and then putting it on the rates. Is there another way to do this? Could we not borrow from our own reserves and pay ourselves the 4.4% interest?
The best answer I can give to you, and I might defer, because I think Tammy's done some work on this, is your best tool is a long-term plan. Because I couldn't give you an answer on that question, because I don't know what is coming on your books for 24, 25, and 26. Somebody just mentioned a plow truck. So using your own funds, if you have a long-term plan, to say, here's what we think we're spending in the next 5 years. Here's what funds we think we have available from a reserve continuity. That's kind of the point of it. I think there are some rules around, if you buy a plow truck in 26, right? That you can't borrow for it in 28 when you realize, oh, we do need that money. So I think that's the hard part of answering that, is you really need a longer picture to really give you an answer to that. And borrowing from yourselves, and not opposed to that, but you have to recognize you can't have an asset and liability to yourself on your books. So we'll sit there as a deficit. Right? Whether it sits as a deficit or it sits as long-term liabilities, they're both going to be in brackets, but one might be a little more clear.
And the intention is to remove the deficit from the financial statements completely.
Right. Tammy, I'm sorry, I meant to get back to you right away. Go ahead.
It's okay. Thank you, Mayor. A couple of things, it kind of goes back to a couple of questions that Council Card actually was asking as well. Couple of things. Number one, the plow truck is IO eligible. So the IO rates are lower than bank rates. We just need the audited statements for the village to be able to apply for that IO. So you are self-financing the plow truck at the moment. So the rates will be lower than the bank rates. The other thing I wanted to bring up was that you in 2025 you do pay off 2 other loans. So your repayment limit in 2025 will actually go down from those 2 other loans. So they did mature and they've been paid off. They were older loans. So I just wanted to highlight that for your information.
Thanks, Tammy. Okay,
One more
anything else
question.
to this motion? The motion, go ahead.
It's my understanding, and perhaps I'm wrong, you can't take reserves from just anywhere. If it's a water and sewer reserve, you have to take the money from those reserves. There's no such thing as a general reserve. Okay, so, and saying we had $118,000 reserve in the water sewer fund, we'd come up short lending the money to ourselves on any account, so.
Head nodding all around. Anybody else, anything in relation to the motion then? Everybody's good? All right. Want me to read it again? Moved by Councillor Aragona, seconded by Councillor Card, that council direct staff to secure a loan in the amount of 251,000 to fund the historical deficit. Anybody else want to weigh in? I'll call the question. All in favor? And that's carried. Okay, I think we made all the comments we have to before we adjourn. Again, to Lori and Carol. We're not done, but there are people all over Ontario doing a happy dance at the financial statements are approved and other things can move along. So thank you for your patience. Thank you for your support to the village. We know we're small, but we are professional, we're ethical, and as you know, we're a lot of fun to work with. Tammy, thank you for coming on board, for sure. And if nobody has anything else, then I will just adjourn. It's moved by Councillor Crapper, seconded by Councillor Aragona, that the special meeting of the Council of the Village of Westport be adjourned at 4:48 p.m. All in favor?